Welcome back to Fast Market on the Schwab Network. I'm Diane King-Haw at the New York Stock Exchange alongside Tom White in our Chicago studio. Time now for our cash tag segment. For that, let's bring in our next guest. We've got Landon Swan, co-founder of LikeFolio, joining us with the latest sentiment data on Darden restaurants. So I want to get into this conversation around your sentiment data around some retail sales data that we had out this week. It showed that people are still eating out. Now, grocery was actually more than eating out, but people are still eating out. So what does the sentiment data look like right now, Landon, as it relates to Darden?
Yeah, so, I mean, when you look at Darden, obviously Olive Garden is the big one. I think they're 43% of sales. Then you've got Longhorn at a quarter, 25%. And all the other brands kind of kick in around, under 10% each. So Olive Garden is the big one to look at. And we've seen a really big move to the downside with Olive Garden interest. So about a quarter ago, the year-over-year numbers were plus 36, and now they're down to negative 13. So they're leading the way down. Longhorn's doing okay. They're at plus 2, but again, a quarter ago, they were at plus 9. So everything's kind of moving in the wrong direction. So a little bit of a concern here with the flagship brand, Olive Garden. And, they've been struggling a little bit. And I think one of the problems is they've got a little bit of a reliance on deals and incentives. And they did well with that, with the buy one, take one, the Uber delivery, things like that. But it's not a sustained interest from the consumer base, and especially from the lower income. People are passing on this brand right now, so we're seeing some problems. We know that last quarter they guided a little bit lower on same store sales. I think they're looking for between 2 and 3.5. And they're losing a lot of momentum. So a bit of a concern here from the flagship brands, and then the others are kind of they're doing their own thing, but Olive Garden and Longhorn are both going in the wrong direction, with Olive Garden leading the way lower.
Yeah, Landon, when you look at this, when this stock was hitting all-time high a few months ago and to kind of pull back, it seemed like your data was spot on as far as web visits versus the stock price. You guys were actually leading on that side. Now we've pulled back a little bit, less than 10% away from those all-time highs. And if you see that turn so much with Olive Garden being responsible, remember, there was a couple quarters, they had double-digit sales growth in Olive Garden that, pushed the stock to all-time highs. When you see the divergence that I'm seeing in your one chart with the web visits versus the stock price, that's a scary divergence for this stock, with it still sitting close to all-time highs, right?
It is, and this chart here kind of takes all the brands in together, and it weighs them as they should be weighed. So Olive Garden has a disproportionately high number of weight in this, as it should, and that's the reason that it's moving. That's the reason that you see this big divergence, is because Olive Garden, again, went from plus 36 to negative 13 in just a quarter. So for whatever reason, people are just less enthusiastic about going to Olive Garden, which of course is going to pull it down. And as you talked about, the stock ran from 150 to around 230. Now it's pulled back not even 10% to 210. So I still think it's pretty high. I think that expectations are probably a little too high given what our data is saying. We don't see the flagship brand being able to hold up these higher expectations. So for us, it's a bet to the downside.
Interesting. Right here by the stock exchange, there's a Capitol Grill, and it looks like demand is strong there. But obviously, that's probably a different demographic than who's going to Olive Garden. I'm curious to know if you're seeing anything, if it's a shift in market share, right, to, say competitors, because I've been seeing that Red Lobster is working on this comeback, and it seems like they're, grabbing some customers back. They may not be pulling from Olive Garden. Who knows? Or if it's a shift in the consumer preferences and choices.
Yeah, it's a little bit of both. One of the things that we're seeing is that the lower income they're eating at home far more, and it's hitting fast food, fast casual, and fine dining across the board. The higher income, which should be like you talked about Eddie V's or Capitol Grill or Ruth's Chris. That should be doing better, but that's actually a bit of a drag on the company, as you can see. And we'll throw this one in here. You got a huge asterisk next to Cracker Barrel. This is their web data. This is not all demand. It was a lot of complaints and interest. So that, don't take that as Cracker Barrel's going off the charts to the upside because of all the controversy. But we wanted to throw them in for scale, just to give you an idea. But Yeah, I mean, there's a little bit of competition taking it, but I think overall the consumer is a little bit more strained. And we've seen a lot of data that shows that more people are eating at home than they were before. They're realizing the costs of eating out, and eating out costs have actually grown faster than eating at home costs. And so for those that are a little bit strained, they're going to stay home, and I think that overall that is affecting the entire sector.
Landon, when you look at this, we've seen Capital Grille, now they own Ruth's Chris also. We've seen deceleration and actually negative same-store sales over the last couple of quarters there. So it was always those people making those choices when Olive Garden was hitting, record, same-store sales, quarter after quarter. It was because they were competing with the McDonald's and the lower priced, which wasn't value at the time, but now they're starting to heat up this price competition. Is that one of the reasons that they're taking maybe market share back from an Olive Garden or a Texas Roadhouse? And do you have an earnings score on this one?
Yeah, I think you're spot on. It's a very fluid situation, right? I mean, when we saw all the comments on social media, people talking about how expensive fast food is, and then they kind of moved to fast casual, and then fast casual got expensive. They moved to more of a Olive Garden type setting. And I think, as we've seen with McDonald's, they got the message, everything's coming down. And now it's like, okay, well, that's back to normal. Fast food is a little bit cheaper now. And I think that Olive Garden's still trying to play catch up a little bit. And I think it's going to continue to move around, and we'll see where it lands. But right now, this quarter is not great, especially for Olive Garden. Overall, the score for Darden is -47. That's from a scale of -100 to +100. So we're firmly in the bullish camp here heading into earnings.
Okay, well, it still had a,
bearish. Sorry, I misspoke.
Oh, bearish camp. Yeah, I was like, okay. I guess. Yeah, that's all right. You caught that one. No, but you make a good point, Landon. Even, anecdotally, with what the sentiment data you see, I mean, just the price of going out and you start making decisions on, okay, could I just cook at home, right? Or if you're ordering, right, then you add in all the fees and you say, all right, forget it. I guess I'm having that at home meal or trying to find a cheaper place. All right, Landon, always great data that you bring us. That's Landon Swan, co-founder of LikeFolio. And now for the trading perspective on all things Darden, I want to kick things over to Tom.